What's going on, traders? Welcome back to another video here. Today we're going to recap one trade I took today. There's more trades than I took, but I specifically want to talk about this one trade I took because, well, I absolutely nailed it, but it's a perfect learning experience for all of you traders out there, whether experienced or newer, but primarily for newer traders. So this trade was on eBay this morning, and this was straight off the pre-market watch list that we do every single day, Monday through Friday, starting at 8:30 till about 9 o'clock in the morning Eastern Standard Time. So this eBay trade was 100% to the T, as we explained, right on our watch list this morning. So hopefully some of you guys that tuned into the watch list were able to trade this. But in this video, I'm going to walk you through the one trade I took earlier in the morning on eBay, which was a short trade, and we'll walk you through the trade, the entry, the exit, the reasons why I got in, got out, and then we're also going to map off the risk that I was willing to take on the trade along with the profit target I had. So we're going to go through the trade from start to finish, and we're going to walk you through the examples of profit-loss ratio and understanding risk management behind a trade and understanding how you can kind of map off your target prices and your risk levels. So this is going to be a really awesome video. So as you can see here on the right-hand portion of the screen, I made a total of $1,232 on eBay today. I traded eBay 3 times, so you'll see all the trades once I show them up there, but we're specifically going to touch on the first trade because that is going to be the most beneficial trade out of all of them that I took. After my first trade on eBay, I got a little bit choppy and was just kind of all over the place, not too good at trading, had a win, had a loss. So regardless, we're going to talk about it right here. So let me do this real fast. We're going to plot my trades on the chart here. All right, give me 1 second. Apply. Okay. So here were all my trades. I accidentally just somehow bought 100 shares on this like a couple seconds ago that I did not mean to do. So completely disregard that. So I traded eBay a few times a day. All right. And you know what? Before we show the trades, I'm going to take them off and then we'll hop back into that a little bit later. So here we go. Take off level 2 here. So eBay was straight off our watch list. We said to look for the short around this price point of $35.70, $35.60. So eBay is a gap down stock. So this is what we call kind of the parabolic short in the morning off of a gap down. So you can see here that eBay, after hours on their earnings, dropped all the way down on a sharp spike down to $35.50 and right around that price point of $35.70. Once it popped back up in after hours trading, it came back down and then it consolidated right on this $35.70 mark. Okay, so what we did is we mapped off these key levels, and I'll go through them and actually redo it. So in my mind, I'm thinking, okay, this is a gap down stock, so I'm going to map off all these key levels. So there's one here at $35.50 and then another one here at $35.70, which was the support level that had been built up in after hours trading that eventually broke down pre-market. All right, so whenever you find yourself on a stock gapping down on earnings, what's taking place is everybody is shorting, okay? They're all shorting the stock down. All right, so when the bell rings, all those shorts cover up to lock in profit. Additionally, dip buyers come in trying to squeeze the shorts up. And then also, it's just an opportunity where people think the stock is going to bounce up because it had such a drastic sell-off. All right, so almost every time on these gap down stocks, you will see that they have a key level they either hit after market or pre-market. So you map off those key levels, and then once you get good and you kind of understand the flow of it, you'll know that people are shorting these stocks and they tend to bounce out of the gates and then they come crashing back down on these earnings gap down plays. So once we have these key levels mapped off, the $35.50 and the $35.70 for the previous spike down after hours trading, and then the key support level that it built in after hours trading that eventually broke down pre-market, you map those levels off. Now we go into the actual position. So what we're looking for today is we're looking for eBay to bounce up in the morning to test these key levels. If eBay can break over these key resistance that it has built in after hours trading, then it has the possibility of going up further on the day. But since it only reached, $35.70 and it started rejecting, there we have the signal that this is probably going to be the short position that we are looking for. So now I will put in the trades here. and we will zoom in. Okay, so we're going to focus. Now that you know where I had all the key levels mapped off, let's do this, shrink this down just a little bit. And zoom in a little bit more. Actually, we'll zoom out. I like it better zoomed out. Okay, so this will show you the trades. So my first trade on eBay was shorting 2,000 shares. My short position, 2,000 shares, was at 30, so you can see here, 35.34. So I got short right here on this yellow arrow at 35.35, excuse me. So I got short at 35.35, which was right about here. So I got short right there in the middle of that red candle. So as soon as I seen eBay pop up, hit our resistance line that we had mapped off, and act perfectly with an inverted hammer candle at the top of this uptrend, okay? So inverted hammer candle, that's a sell signal or even a short sell signal. So I hopped in the trade short 2,000 shares at 35.34, and I covered all the 2,000 shares, as you can see here, plus 2,000. So I covered up my 2,000 shares at 34.70, which ended up being, that's 34.60, 34.40, so 34.70 was like right here at the low of this candle. Right at the low of that candle is where I covered up my 2,000 shares. So I went 2,000 shares short and covered them up. So 2,000 shares short at 35.34 and covered up those 2,000 shares right at the bottom of that candle at $34.70, which ended up making me about $1,300 in the day. But then I ended up kind of chopping myself around here on a few more trades, and then I ended up giving back a little bit, but not much. So to walk you through this trade, we mapped off those key level resistance. We understood that there's probably going to be an early morning squeeze on eBay up to those key levels, as we had mentioned in our pre-market live stream this morning watch list. It hits that key level there at 35.70, drops down to 35.34, which actually wasn't the best entry. I wasn't paying attention close enough, and I could have got it sooner, but either way, I still recognize the trade and it was most likely going to work in my favor. So I took the trade there at 35.34, short 2,000 shares all the way down to 34.70, where in turn I ended up covering up my position for a win of about $1,300. All right. Why did I cover up the 2,000 shares here at 34.70? Well, if we zoom out, let me get off these old drawings. If we zoom out, you will see that 34.70 was the pre-market low, which was right there. So if you go straight across, you'll see that 34.70 was basically the pre-market low. So you should be able to anticipate that short sellers like myself are going to start covering at that level, and other dip buyers that are looking to buy it long are probably going to try and buy around that pre-market low area, anticipating that short sellers will cover up there, and then they can make a nice gain on that squeeze. So we short at the resistance and we cover up down at the support where we know other shorts are going to cover up, and other dip buyers may be looking to come back into eBay and try and squeeze up some more short sellers. So rather than waiting to get squeezed, we just anticipate it and take our profits and be happy. $1,300 trade, not going to complain. All right. So now let's look at the risk reward behind this trade. All right. Whenever you're trading, you should always have in mind a stop and an idea of your profit target so you can understand how much you're going to risk for how much profit you're going to make. All right. If you don't understand, if you don't know what you're risking to get in a trade, you shouldn't be trading at all. And if you can't map out a profit target area, then you still shouldn't be trading at all. You don't want to be guessing going into a trade. You want to have a plan or an idea as far as where you could possibly reach and where you need to stop out. So now let's go into here and we're going to zoom in. All right. So let's map this out. I'm going to show you where my entry was. So my entry was this yellow arrow. So 35, 30, like right there. And so actually let's do this differently. We're going to do a red arrow because technically I sold here first, short selling. So we'll do a red arrow there and we'll do a green arrow where I bought it back, which is at the low of this candle. And now we're going to show you kind of the risk to reward ratio factor here. So this red box will represent my risk on the trade. So my risk, oops, that's not a red box, that's still an arrow. So this red box will represent the risk I was willing to take So this red box was my risk where I was risking the previous high candle. I should have got a little bit better of an entry, but it's okay. So this red box, actually let me do it like this. So this whole red box going upwards, that was my risk. From my red arrow to the high of that candle was my risk. And my profit potential was this whole green box from my entry down. Now you can clearly see, and actually let me redo that. Let me spread it out a little bit more. So now you can clearly see that the amount I was willing to risk on my trade is much less than the amount I was willing or going to make on the trade. So from where my entry was, which is at 35.34, all right? So my entry was 35.34, and the previous high of the candle was at a price of 35.65. So from 35.34 to 35.65, I was risking about 20 cents on my trade, okay? Willing to take a 20-cent loss on my trade. And at 2,000 shares, that means I was willing to risk $400 on my trade, okay? My profit potential from 35.34 down to 34.70 was a 65-cent potential gain, almost 70 cents. So I was risking 20 cents to almost make 70 cents. Right there is a 1-to-3, almost 1-to-4 profit loss ratio. And in trading, in order to be profitable, you have to make more than you're willing to risk. Or on your trades, you need to lose less than you can make, essentially. So that's the profit loss ratio there, is making sure that when you get into a trade, you have a defined level of where you're going to stop out and a defined level of where you project you can see the stock, where the stock will go, in which you can sell and lock in your profit. So in this trade here, if I got a better entry, which I should have, but I didn't, I would have had maybe a 1-to-5, 1-to-6, or 1-to-7 profit loss ratio. So I was willing to risk 20 cents to make 70 cents a share on this stock. That profit loss ratio right there is a 1-to-3, close to a 1-to-4 profit loss ratio. In trading, you need to at least have a 1-to-2 profit loss ratio in order to even justify or consider taking the trade. If you yourself cannot map out at least a 1-to-2 profit loss ratio on your trade, you should not be trading that position or that trade, or for the most part, trading in general. All right. 1-to-2 profit loss ratio. What does that mean? That means if you're considering taking a position and you're willing to risk 10 cents on the trade, you must at least be able to make 20 cents profit. In trading, we want at least a 1-to-2 to consider trading it. But we want 1-to-3, 1-to-4, 1-to-5, 1-to-10, 1-to-20, 1-to-100, as much as you can get upside to downside. So in trading, if you can at least justify getting a 1-to-2 profit loss ratio, you should not be taking the trade. So if you think a stock is going to move up 4 cents, you should only be risking 2 cents. Okay? Let me put it this way. If I were to tell you, hey, would you like $100, but you have to risk your own $100 to make the $100, that doesn't make sense, because you shouldn't risk $100 to only make $100. You're better off just keeping your $100 and playing it safe. But if I said, hey, I'll give you $400 if you risk your $100, now you're like, well, you know, that's justifiable. That makes sense. I'd be willing to risk $100 for you to give me, or make $400. That makes sense. That would equal a 1-to-4 profit loss ratio. So in this trade here, my risk was clearly less than my profit potential, and that's why I was able to justify taking this trade on the stock. I had almost a 1-to-4 profit loss ratio. 2,000 shares short, 35.34, covered up all 2,000 shares short at 34.70, netting me $1,300. Okay, so pretty good trade there. I made almost $1,400 on the trade. Risking, my initial trade was about $1,400 profit. So I risked $400 to make $1,400. So that's a nice profit potential on that stock. So I just want to cover that one position with you today, as it was an absolute monster trade. It was beautiful, nailed it. Could have done a little better, but I'm not going to complain with that trade. Altogether, though, I am finishing my day down quite a bit. It's been a pretty profitable day. So I'll show you here. Let me delete these old drawings. So altogether today, I made a total of $2,616 with commissions taken out. It was more of like a $2,450 day, but I was able to get myself 1,200 on eBay, 1,100 on IQ, and 278 on PM. If you go back to my pre-market morning watch list, these three stocks were kind of the main stocks I was going to play today, and almost each and every one of these stocks worked out 100% to a T, as I explained on the pre-market watch list. So if in general you followed my watch list today, you should have been profitable on all of these stocks, same as I am today. So again, do make sure to tune into those pre-market watch lists, as you're going to learn a ton, and you also get very good stock tips on the stocks that we're trading each and every single day. So I hope you guys like that video, and I hope it makes sense to you and it helps you learn something new about trading. Always do give a like, share, subscribe, hit the notification bell so you always get alerted when a new video comes out or a new watch list is being presented in the morning. Other than that, guys, take care, stay green, and I will see you tomorrow morning for another pre-market watch list.